Right, guys. Sorry I started late. Just give me a few minutes till so we are continuing from where we stopped. I think today we have to start with throughput accounting. Am I right? Since someone just tell me. We have to today start revision from throughput accounting, right? Give me a moment. I'm just opening the ACCA. All right. So I've opened the ACCA Study Hub. And we are going to do questions on throughput accounting. And before that, we also have to go through the notes on throughput accounting to just have something. Right. All right, so throughput accounting. This is again a part of costing. So we are still revising costing areas. What is throughput accounting, especially for companies that operate a JIT system or a Japanese management system, where they are trying to minimize waste? The best costing system for them to use is generally throughput accounting. Throughput is very similar to contribution, but the only thing is in throughput accounting, we assume that the only variable cost in the short run is material cost. So even labor we consider to be a fixed cost. So throughput is sales minus only the material cost. Why? Because we assume that only material cost is variable in the short run. We think that labor and all of that could be a fixed cost. The main concepts of throughput accounting, we assume that most costs are fixed, right? And with except for material, everything else is fixed, and all other costs cannot be altered in the short run, right? So all the fixed costs are called total factory costs. So generally in a JIT environment, throughput is most valid, or it's more suitable in a JIT environment to use throughput. So, right. Now with throughput, we assume that if there is a bottleneck or something that is limiting you from doing your work, right? How do we calculate the more profitable products? So the more profitable products are generally the products that have a higher throughput. How do you calculate throughput? Sales minus material cost. So in many questions, they would ask you to identify the combinations of product that they need to make, right, in a throughput environment, or the the throughput accounting ratio you can be asked, right? Okay, so if there are limitations, or there are constraints or bottlenecks, these are the steps we follow. We identify what the bottleneck is, because in a JIT environment, you try to smoothly manufacture all goods, right? So we try to identify if there is some sort of a bottleneck anywhere, because a bottleneck will limit your speed of production. Due to a bottleneck, you will not be able to produce as fast as you would want to. So you try to decide what is your bottleneck. You try to exploit the bottleneck. You try to basically make sure that, you get the maximum use of your bottleneck. If you have limiting factor, like a limited labor hours, or if you have limited machine hours, or if you have limited demand, whatever, we would try to make the maximum use of it. Let's say we have limited labor hours. Using those labor hours, we will try to make the products that's giving us the best return. Right? So you have to analyze which products are more profitable to us, which product should we make first using our labor hours. Okay. So you have to ensure that production up to the bottleneck is at the same rate as after the bottleneck. That means all the other production systems, all the other stages of production, everything should be in line with the bottleneck or at the same rate as the bottleneck so that production can smoothly happen. Right? You have to try to elevate your bottleneck, meaning you have to try to get maximum use of it and also try your best to increase. Now, for example, if labor hour is your limitation, you try to increase the labor hours. You try your best to find more laborers. And after you have solved one bottleneck problem, it doesn't end there. You always look for a new bottleneck and you always try to make sure that bottlenecks are continuously eradicated because bottlenecks slow down your process and you try to keep it as smooth as possible. Then the throughput accounting ratio. Throughput accounting ratio, right, is calculated to see which products are giving us a higher throughput return. Okay. So for that, we have now throughput ratio is calculated in step number 3, but we have to follow step 1 and step 2 as well. Step 1, we find the return per factory hour. In step 2, we find the cost per factory hour. Then we put those together here. Return per factory hour, throughput accounting ratio is equal to the return per factory hour. Here we can see how you find that return. Divide by the cost per factory hour. You can see here how to find that. How do you, for one product, how do you find the return per factory hour? You take the throughput per unit. How do you calculate throughput? Selling price minus material cost. Divided by product's time on the bottleneck. Divided by how long the product takes on the bottleneck. Then if you are making more than one product, you take the total throughput of all the products, divide by the total bottleneck hours available. Cost per factory hour is total factory cost divided by total time available on the bottleneck. You have to find these answers and then put it here. So if the return per factory hour, if you have one product, this is how you calculate. If you have more than one product, this is how you calculate. The throughput ratio, if it is greater than 1, that means the return is higher. That is why it would be greater than 1, right? Wow, we have a lot of students joining today, 17, superb. Okay, so the throughput accounting ratio will be greater than 1 if the return per factory hour is higher, right? So if it is greater than 1, we could say it's a profitable product. If it is lesser than 1, that means the cost per factory hour is higher. So then we could say that there is a loss that's been made, right? That's what they say here. However, there are criticisms because it's mainly focused on the short run. In the long run, labor is also variable, right? We are only concentrating on material cost here. So it could be like very short-term oriented, right? How to improve the throughput ratio? Mainly, you have to try to improve your revenue or you have to try to reduce your cost. So increase the selling price, reduce material cost, reduce total operating expenses, and try your best to improve productivity. Limiting factor analysis, when there are limiting factors only, we have to try to make the best use of our limiting factors. So then if there is limiting factors, the questions might ask you, okay, we are in a throughput environment. We have a limitation of resources. So what is the optimum plan? What combinations of product should we make? Which product should we give priority to? So generally we give the product that has higher throughput, we give that product more priority. Which product should we make first? In order to identify that, we follow 5 steps. You identify the bottleneck, step 1. Step 2, calculate the throughput per unit. Step 3, calculate throughput per bottleneck resource. I'll show you how to do that. Then you rank your products. And then based on the rank, you will make the high rank products first. After that, the other products. I'll teach you how to do that. Okay, let's go to a question. This is ABC costing. question. I think I'll take a question from the first. So you know that throughput will not come in section C. It will generally be tested in section B. Costing will only be tested in A and B, right? It won't come in section C.
Akida, busy ya?
Mic is on. Somebody's mic is on.
Busy ya? Hah? Rasa? Tadi minta.
Someone's mic is on. Beckley, we already did it in class. There's very less questions here on throughput. So because of that, I think the questions here we've already done. So what I'm going to do is I'm going to do this short questions, section A questions. Okay, guys, let's solve these tiny questions, but we'll learn something out of it, right? A company operates a throughput accounting system. The company operates a throughput accounting system. The details per unit of cost C are as follows: selling price, material cost, labor cost, overhead cost, time on bottleneck resource. What is the throughput contribution per hour for product C? So how do you calculate throughput? Throughput contribution, they're just asking per hour. When throughput per unit will be per unit, the throughput will be selling price of the unit minus material cost. Selling price 28.5 minus material cost 9.25. 19.25. But that is per unit. One unit takes how many hours, guys? How to find them? Because they ask throughput per hour. How do we find the hours one product takes? Time on bottleneck 7.8 minutes. And weight cost is given, labor cost is given. How do you calculate this? A company operates a throughput accounting system. The details per unit of C are given. So what we can do is, okay, this is the throughput made per unit, right? One unit takes 7.8 minutes. That means in 7.8 minutes, they are making this much of throughput. In 7.8 minutes, they are making a throughput of 19.25. In 60 minutes, meaning 1 hour, what is the throughput they will make? How do you find? So you simply have to take 19.25, divide by 7.8, multiply by 60. 148.07 or 08. So sometimes the questions will be in this nature. So you need to know how to face each one, right? It will take a little bit of thinking to process it. So this unit, it's getting a throughput of 19.25. That unit is taking 7.8 minutes. Meaning in 7.8 minutes, they are making this much throughput. In 60 minutes, what is the throughput they will make? Next question. A company produces 3 products, DEF. The statement below shows the selling price and the product cost per unit for each product based on traditional absorption costing system. Okay, so we are having a selling price, variable cost, fixed overhead, total product cost, profit, everything is there. Demand per period, time in process, everything is given. Each product is processed using process A, which has maximum capacity of 2,500 hours per period. If a throughput accounting approach is used, what will be the ranking of products in order of priority for the profit maximizing product mix? So they ask you the ranking, meaning in order to find the ranking, guys, we have a few steps to follow. To get the ranking, we have to follow these steps. Identify the bottleneck, step number 1. Step number 1, identify the bottleneck. What is the bottleneck here? Each product is produced using process A, which has a maximum capacity of 2,500 hours. The bottleneck is process A. Process A minutes are scarce. Step number 2 is what? Calculate the throughput per unit. Calculate throughput per unit. How do you calculate throughput per unit? Product B. Selling price. Throughput, how do you calculate? Selling price minus direct material cost. That's all. Okay. Then step number 3 is what? Calculate throughput per bottleneck resource. Okay, that means we have to see, I'll tell you, step number 3 is what you have to be careful about. Throughput per process A minutes, because bottleneck is process A, right? So throughput per process A minutes is what you want. So you have the throughput here. We have to divide it. Now, basically for 1 unit, you are making a throughput of 22. But 1 unit is taking 20 minutes. So we are basically seeing in 1 minute, what is our throughput? So throughput, right here, process A minutes. Product D is taking 20 minutes. Product E is taking 25 minutes. Product F is taking 15 minutes. So throughput per minute will be 22 throughput per unit that is made in 20 minutes. That means for 1 minute, you are making 1.1. Here for every minute, you are making 0.8. Here for every minute, you are making 1.06. So based on that, we now do step number 4, ranking. So what is your ranking? This product, that is product D, is making, for every minute, they are making a throughput of 1.1. So if you put 1 minute there, you're getting the maximum return, right? So giving that a rank of 1, you would like to make that product first because it's giving you a higher return for every bottleneck hour. Then this product next and this product third. So what is your ranking? D, F, E. D, F, E. So that's how you do the ranking. Then this is not throughput. I'm skipping all these questions. I'm only doing the throughput questions. I think the other questions on throughput, I have done everything. Somebody had sent me a question about throughput during the week. Can that student send that question again to me? Which question number was that? Or just tell me what question number was that? Here, there's question 10. Do you all want time to copy this down, guys? Question 2. This question. Do you all want time to copy this down? Do you all want time to copy it, or are you all okay? Can you all tell me, do you all want time to copy, or is everyone okay with it? You all have any doubts? You all have any doubts? Any doubts? You all want time to copy, guys? Like, let me know. Or is everyone okay? Don't need time. For this is the answer position. Oh wow, Siraj is doing the other one also. Good, Siraj. Okay, so here a product when manufactured in 3 consecutive processes, preparing, machining, polishing, the time taken per unit and the total hours available per week are as follows. Process, preparation, machining, polishing, hours per unit, 2 hours per unit, machining 4 hours per unit, polishing 3 hours. Total hours available is given. Demand for the product is 50,000 units per week. 50,000 units per week. If any of the process is the bottleneck. Okay, so it's like this. Hours per unit is total hours. Let's just take total hours. There are 3 stages of preparation. Machining, polishing. So here 2 hours per unit into 50,000 units. That means 100,000 hours you need. So here hours needed, right? We have to see the hours needed. We have to compare it with hours available. So here 100,000 available. You need 100,000, you have 100,000. So actually no problem there. Machining 4 hours per unit. So we basically need 200,000. We have 220. We have more than what we need. Polishing 3 into 50,000. 3 hours for a unit. So 50,000 units, we need 150, but we only have 120. So what is our bottleneck? Like you said, correct. C is the answer. Okay, here they are asking what is the return per hour for A. EXCO uses throughput accounting system. Details of the product. This is one product, right? As follows. So how do you find the return for one product? For one product, what is the formula? Return per factory hour is what? One product, return per factory hour is. If someone send me a doubt on throughput, can that student send it back to me so I can speak on that to everyone in the class? Divide by products time on. So throughput per unit. So we have to find the throughput per unit. That is selling price minus material cost. So that will be 320 minus 80. Divide by products time on bottleneck. What's the products time on bottleneck? Time on bottleneck resource 6 minutes. So basically 1 unit is making a throughput of 240 in 6 minutes. So what is the throughput per minute? First let's find. For 1 minute they are making a throughput of 40. This is 40 per minute. Be careful. They are asking the answer. What is the return per hour? So we have to convert 40 minutes. Sorry, 40 in a minute, meaning in an hour there is 60 minutes. So 2,400 per hour. In 1 minute 40, in 60 minutes, which is 1 hour, 2,400. So those are little tricky, guys. You have to be very careful when doing it. Okay, here they are asking what is the throughput accounting ratio. Company manufactures a product that requires 4 hours per unit of machine time. Machine time is the bottleneck resource as there is only 10 machines that are available for 12 hours per day, 5 days per week. The product has a selling price of 130 per unit, direct material cost of 50 per unit, labor cost of 40 per unit, factory overhead cost of 20 per unit. These costs are based on a weekly production and sales of 150 units. What is the throughput accounting ratio for the product? Now it's one product, right? So we have to calculate the return per factory hour same way as we calculated. Throughput per unit divided by product's time on bottleneck. Okay, then we have to calculate that. After that, we also have to calculate the cost per factory hour. For that, let's just put the workings here. How do you calculate cost per factory hour? Cost per factory hour will be total factory cost Sorry guys, I by mistakenly pressed the I'm so sorry, I by mistakenly pressed the switch off button in my laptop. So total factory cost is cost per factory hour is total factory cost divided by cost per factory hour. Then you have to find the throughput accounting ratio. Throughput per unit. Okay, now we first have to find throughput per unit. So how do you calculate throughput? Selling price minus material cost, which is 130 minus 50. Okay, that is pretty simple. Then 80 divided by product's time on bottleneck. Machine time is the bottleneck as there are only 10 machines available for 12 hours per unit. What is the product's time? A company manufactures products that requires 4 hours per unit of machine time. So 4 hours. Product's time on bottleneck is 4 hours. One unit takes 4 hours. So per unit throughput is 80. Per unit takes 4 hours to make. So in 1 hour, they're making a throughput of 20 per hour. Total factory cost. So we have to find that. Total factory cost will be product selling. Okay, direct material we've already taken. Total factory cost is the fixed cost. 40 per unit of labor and factory overhead 20 per unit. That means factory cost is 60 per unit for 150 units. So what is your total factory cost? 9,000. Divide by cost per factory. Sorry, I think I've taken it wrong. Divide by total time on bottleneck. Divide by total bottleneck hours available. What's the total bottleneck hours available? We have to calculate. Who is Hari? Why is Hari calling? There's a separate link called TRG link. You have to join through that. See in the TRG group. Aren't you in the TRG group?
No, ma'am, I am not in the group.
Okay, I'll just send it again. 1 minute. Can someone send the TRG link in the January batch group? Someone send the TRG link in the January batch group. Hari is waiting to join. I don't know how he joins. I sent him last week also the TRG link. Can someone please send that TRG link in the... I don't know where to find it. Okay. Okay. So then, okay, then we need the total bottleneck hours available. How to find that? This is the total cost. How to find the total bottleneck hours available? How do we find that? Machine time is the bottleneck. There are 10 machines available, 10 machines that are available 12 hours per day. 10 machines are available 12 hours per day, and that is a total of 5 days. 5 days a week. So altogether, 10 machines into 12 hours a day. So for a day, 10 into 12, but there are 5 days. So 600 machine hours are available altogether. So for one machine hour, what is the cost? 9,000 is the cost for 600 machine hours. So one machine hour, 15 per hour. So what is your throughput accounting ratio? 20 divided by 15. Jeez. It's greater than 1, meaning the return is 1.33A. Yeah, someone already told me Miss A is the answer. Correct. Good. I think, yeah, that's pretty enough for the throughput questions that we have done. Now let's go to the next area, which is relevant costing. So when it comes to relevant costing is generally used when we make decisions. For decision making, the best costing to use is relevant costing. What do you mean by relevant costing? We only take costs that are relevant to a decision into consideration. So, okay, this cost will be incurred if we make the decision. Then we take it. If the cost will anyways happen, then we don't take it. What is this? 57 question. Keep the result. This is bound. Okay, there is a question on throughput. Sky Limited operates in an environment where products go through 2 processes and details of their capacity are below. Process P, there are 8 machines operating at 90% capacity. Each machine produces 6 units per hour. Process Q, there are 6 machines operating at 85% capacity. Each machine produces 9 units per hour. But the machine is able to produce 6 units per hour, but they are only operating at 90% capacity. So probably they are making lesser than they should be. Sky Limited produces the cloud, which is not a popular product. The marketing manager has therefore decided to apply a price discount of 15% on the selling price of 20 per unit. The material cost per unit is $5 and the direct material cost per unit is twice that of the material cost. It currently takes 0.2 hours and 0.3 hours to make a unit of cloud on the machines in the process P and Q respectively. Which book is ideal and enough to pass PM? Okay, to pass PM, what I recommend is try to do all the questions in the Kaplan kit. If you had followed my classes, you would have already finished 50% of Kaplan kit questions because we did that during class hours. And the remaining 50% you finish. So if you are a student who is external, best to finish the Kaplan kit and do the questions in the study hub as well. Study hub is very important because questions from the study hub is repeating, guys. Right? So do the questions from there. Very similar questions are coming in papers, and anyone who did that passed last sessions. So please take your time, do questions from the Kaplan book and do questions from the study. If you manage to finish all the study hub questions, you have a very good chance of passing. Is BPP or Kaplan? Kaplan and study. BPP has a little tough questions, too advanced. You will not be tested. If you have extra time, BPP, superb. You can aim for a world prize maybe, right? But if you do not have that extra time, then don't do that. If you are average student, I would not suggest go with BPP. Go with Kaplan and go with study hub. If you are very intelligent and if you have, you all know about your situation, right? If you all have finished Kaplan and if you have finished study hub and if you have extra time and you're looking for more questions, yeah, go do BPP. Right. But if you're initially just starting, then start with Kaplan, go to study hub. If you have more time, do BPP also. That's perfect way to do, right? Okay, so here they're asking you, what's the throughput per hour of the bottleneck resource? Okay, throughput per hour of the bottleneck resource. Now there are two products here. This one product is going through two processes. We first have to identify what is the bottleneck, guys. So they have said there are 8 machines, 90%. We have to find which process is the bottleneck. What is the bottleneck resource we have to find first? We'll see which process can produce lesser units. So, process P, 8 machines. Each machine can make 6 units per hour. That means altogether these 8 machines can make 45 units. But they are only operating 90% of capacity. That means they are only able to 43.2 units. What about process Q? There are 6 machines. Each machine can make 9 units per hour. That means they can make 54 units, but they are operating at 85% capacity. That means they're currently only making 85% of what they could make. So looks like process P is your bottleneck, right? Because you can make limited quantity of process from process P. Because they're asking throughput per hour. So what is the throughput first? What's the answer for this from the ones who got it? Just tell me the final answer only. Throughput per hour is what they're asking. So what is the throughput? How do you find selling price? He has decided to apply a discount of 15% on the selling price. Selling price minus direct material. Can someone just send me the answer or just what is the final answer? Just so that I know it. Selling price will be 20 into 15% discount, meaning 85, right? 85. Okay. 17 minus material cost 5. 12. So throughput is 12. 12 per unit. 12 per unit. And how much of process Q hours does it need? 0.2 hours per unit. So yeah, 12 per unit, you have done it in 0.2 hours. That means in 1 hour, which is 1. What will be the throughput? 12 you are making in 0.2. That means in 1 hour, you will make 60. Yeah, 60 is the answer. Now 12 is your bottleneck. Guys, in this question, you first have to find what is the bottleneck. Because there are 2 processors. No, they have not told you what is the bottleneck. So we can see here now, see, process P, they can make, with the available machines, they can make only 48. Here they can make 50. So what process can make limited units? Process P. So that is the bottleneck. So therefore, we take the throughput divide by the process P's. We have to take the process P's timing. So 12 per unit, 1 unit is taking 0.2 hours. Therefore, in 1 hour, what is the throughput that product can make? They're asking throughput per hour, no? 12 in 0.2 hours. So in 1 hour, it's 60. How did we get it? 12 divided by 0.2 into 1. Is that clear now? Who asked me that doubt? Yeah, because it's making less units. P is a bottleneck. It's limiting what we can do, right? A bottleneck limits what we can do. Yeah. You can keep it as 60.00. That's it 60, right, guys? Your told me it's 60. It's 60. Put 60.00. So if they ask for 2 decimal places, what else? Is that clear? Is that clear? Then I went to relevant costing, right? So if you all have any particular questions like that, you all can tell me, right, guys? Then we can discuss that. Okay, then we were going to relevant costing. So I was telling you relevant costing is used mainly when we are making decisions. Relevant costs are the future costs. That means due to this decision, the cost that we are going to incur in the future. Relevant costs are incremental costs. That means it's going to increase in the future. One moment. One moment, guys. Okay. Relevant cost is incremental cost. Relevant cost is only concerned with cash flows. That means relevant costs are only cash items. Money that will go out in terms of cash or money that will come in terms of cash. Now, non-cash items like depreciation is not relevant. We completely ignore it. Relevant costs are committed costs. That means, committed cost is not relevant. Anything that's fixed is not relevant because you have to anyways pay it, right? Even if you make the decision or not, that fixed cost has to be incurred. So that is irrelevant cost. Even committed cost has to be incurred. So it's irrelevant cost. Opportunity cost is relevant because we are deciding to do something. We are giving up something else. So that profit we gave up is a relevant cost. Opportunity cost is a relevant cost, right? It's why? Because we choose to do this, we gave up the profit from that. So the profit we gave up is relevant. Relevant costs are avoidable costs. Costs that can be avoided, right? For example, if we make this decision, that cost doesn't have to be spent. But if we make the decision, we have to spend it. Something like that, right? It's directly linked to our decision. When we are doing relevant cost of material, relevant costing guys can even make or buy decisions, cost volume, profit analysis. It all uses principles of relevant costing. But now in specific, sometimes they can ask you relevant cost of material. So then you have to see the situation. If the material is not in stock, we have to buy it. No, it's not in stock. So it has to be purchased. Meaning the relevant cost is the current replacement cost, the cost that we are going to buy it at. If it is in stock and if it is used regularly, that means we are often using it. So we are going to often be selling off the stock and we are often going to replace it and often we are going to use it. So the relevant cost is the replacement cost. If it has no other use, it won't be replaced. Therefore, we take the higher of resale value or alternative use. If it has no other use, that means it's just going to be idling there. So we have to say, okay, what are the options? It's not going to be replaced. We don't have any use for that material. It's idling in our company. We can either sell it. So we see what is the resale value. If we sell it, how much will we get? If it has an alternative use, if we put it to the alternative use, what's the benefit we are going to get? Then the higher of the two. If you are going to get a higher resale value, you will sell it. If you are going to get a higher benefit, you will put it for that benefit. So you have to take the higher of the two. If it is scarce and we can't replace it, we go by the opportunity cost. It depends on the situation. Labor, if the labor has spare capacity, that means labor have extra time. For example, I am paying a salary for 100 hours, but he is currently only working 80 hours. Extra 20 hours I have paid him, but he's not doing anything. So if I give him more work for that 20 hours, he has spare hours, right? So he's going to only work in his spare hours. I don't have to pay him anything more because I've already paid him for that. So the relevant cost is nil. But if they are working at full capacity, I have already paid them for 100 hours. They already have work for 100 hours. So if I'm going to make them work more, I have to hire more workers because these guys don't have any time. So I have to get workers from out. Now, if I get workers from out, I have to pay them extra pay, the current pay rate. So it's the current pay rate. Or else my next option is to make them stop working on one product and pull them towards my product. Then what happens? I am, because they are already having full work, right? So I'm making them to stop working on one department and I'm pulling them to another department. What happens then? Work from one department is stopped, right? And I'm pulling them to another. So then you have a lost contribution. The contribution you are losing from the other department and the variable cost in addition as well. So at that time, if you're shifting them from another department, you have to take the lost contribution. Why? Because I'm making them work in this project, I'm losing that contribution. Plus the extra variable cost as well. Then, yeah, that's all you need to know for that. So you just go by that guideline and it becomes very easy to do. Any questions in particular you all have for relevant costing to do, let me know. I will do it. I think I've already done bits and pieces. Okay, let's do this. Let's read the case, bits and pieces. Bits and Pieces operates a retail store selling spares and accessories for the car market. The store has previously only opened for 6 hours per day, 6 days per week, and for 50 working weeks in the year. But BP is now considering also opening for trading on Sundays. So they are deciding, should we open on Sunday? Average daily sales from Monday through Saturday is 10,000 per day with an average gross profit margin of 70%. Sunday revenues are expected to be 60% more than the average daily revenues for other days. BP buys all its goods from one supplier. The supplier gives a 5% discount on all purchases if annual spend exceeds 1 million. The store will have to be supervised by a manager currently employed by the company and paid an annual salary of 80,000. So he's already paid a salary. We don't have to pay him anything more if you open on Sunday, right? If he works on Sunday, he will take the equivalent time off during the week. So we are not going to pay him anything more for working on Sunday. He'll just take another day off. When the assistant manager is available to cover for him at no extra cost to BP. So that's not relevant. That cost is not relevant when you're deciding whether to open on Sunday or not. He will also be paid a bonus of 1% if the extra sale generated by Sunday trading. That bonus may be relevant because only if he goes on Sunday, he's going to get that. The store will have to be lit at a cost of 30 per hour and heated at a cost of 45 per hour. If you're opening on Sunday, that is a relevant cost. But because if you're opening on Sunday, you have to light it and heat it, right? The heating will come on 2 hours before the store opens in the 25 winter weeks to make sure it is warm enough for customers to come in at opening time. So not only the working hours, 2 hours before itself, you have to put the lighting on. The store is not heated in the other weeks. The store is not heated in other weeks. That means only the 25 winter weeks, they are going to be heating. The other weeks of the year, they are not going to be heating it. It is the company's policy that gross profit is stated after deducting the cost of goods sold. Staff cost, energy, and rental cost are not deducted from sales in determining gross profit. The store employs 4 employees, and in addition to the manager, they each work 5 days a week and are paid 200 per week. They all currently work on Sundays and take a day off in lieu of this during the week. If Sunday trading is introduced, 2 of the existing staff will work on Sundays instead of Saturdays and be paid a premium of 30 each. The extra pay is only relevant, right? 2 part-time employees will be hired at 20 per each per Saturday and 30 each per Sunday. By how much will the introduction of Sunday trading increase annual gross profit? So we have to see basically what we have to see is extra revenue on Sunday. And we have to deduct the extra expenses. So if they open on Sunday, what is the extra revenues that we can achieve? And what is the extra expenses we have? Revenue, what's the extra? Average daily sales on Monday to Saturday are 10,000 per day with an annual average gross profit margin of 70%. Sunday revenues are expected to be 60% more. Average day. So Sunday's revenue will be 60% more. Sunday revenue will be 10,000 per day into 60% more. That means it will be how much per day? 10,000 into 160 divided by 100. How many weeks are you going to be opening? For 50 working weeks, right? So this is per day. That means for the 50 working weeks, what is the total revenue you will see? 16,000 per week into 50. So this is your increase in total sales. BP buys all its goods from one supply. This supply gives a 5% discount on all purchases. Annual spend increases exceeds 100,000, 1 million. So let's see what is their current. Let's see what is their current cost of purchases. How do we find that? Currently, you can see like this. Currently, Monday to Saturday, they're having revenue. That means 6 days, no? Monday to Saturday, they're having revenue of 10,000 per day. So in a week, 10,000 into 6, right? Yeah. So in a year, their revenue is 300,000. In this, their gross, after minusing purchases, their gross profit is equal to 70%. Sales minus. So what is their current purchases? Currently, their purchases are 900,000. Currently, their purchases are 900,000. I hope you have got it. Revenue, how did I get? A day 10,000, 6 days a week into 50 weeks. So in this is the revenue, then 70% is the gross profit. So the remaining is the purchases, right? But now if they current, right? Now if they buy for 7 days a week, then their total, oh no, it's going to be higher. No, it's going to be this. Now their sales are going to be this amount plus this as well. That will be their sales till the GPV maintained. And their purchases will be they have not told the GP margin is changing. No. So we are going to take the same GP margin. That means our gross profit will be that, meaning our current sales will be, current purchases will be more than 100,000. Meaning we are going to get a discount. We are going to get a discount. So therefore, it is going to be a 5% discount. We are going to get the 5% discount. So here we can see the increase. No. Increase in purchases is how much? Increase in purchases will be, earlier it was, now it's this, earlier it was this. This is the increase in purchases for the Sunday sales. 240,000. In that we are going to get a discount. Purchases for Sunday, it's going to be 240,000, but you're going to get a 5% discount. Actually, you're going to get the discount for everything, right? So you're going to be only paying 95%. Meaning, what is your gross profit going to be? How much will the introduction of Sunday training increase the annual gross profit? How much will it increase the total gross profit? No. So what we can do is, wait, we can do it like this. So total sales will be this plus this. Total purchasers will be, if we are going by the normal rate, our purchase is this much, but now we are going to get on this a total 95% discount. Okay, so our gross profit will be now how much has it increased by compared to previous year? Old gross profit was, the old gross profit was 210,000. Sorry, 2,200,000. So increase in gross profit is how much? The increase in GP is 617,000. They're asking for that. Guys, did you all understand how I did it? This is the current sales. I hope you all got it. And if we take a 70% GP margin without the discount, like ignoring the discount, if we take a 70% GP margin without a discount, if we go, this will be our gross profit. Therefore, this will be our purchases. That is without the discount, right? But the thing is, we are going to get a discount, right? So our total sales will be this. Now, this is our total purchases without a discount, but we have to take it with the discount. So this will be our total purchases after discount. And then we can find the gross profit and compare it with the old. Is that clear to everyone? Did everyone get it? Or you need time to process it? Anyone having any doubts can ask. It is a complicated working, but if you get it, Miss, how did you find the purchases for Sunday? Here. So, okay, 10,000 per day. No. For Sunday, they told it's going to increase. Sunday's revenues are expected to be 60% more than normal. That means Sunday's per day revenue is 16,000. By 60% more, no? So, Sunday per day, you're making 16,000. So, this is per day. That means for one Sunday. In a year, there are 50 Sundays, right? Per week, you have one Sunday. So in a year, there's 50 Sundays. So altogether in a year, 800,000. Is that clear? Here, 800,000. Then Sunday. So now you will have total sales of 3,800,000. If you take 70% of that without the discount, this is your gross profit. So if you go and see without the discount, this will be your total purchases. But because now you are buying more than 1 million, you're going to get a discount. Now, why are we doing this working? To figure out what is the purchases. To figure out the purchases, we have to do that working separately. Because we find the purchases, now we'll know whether they are getting a discount or not. And we anyways need the purchases now to find the gross profit as well. Using the GP margin. You all need to copy this down, copy it down. That 5% anything that exceeds 1 million, right? New is, but there is existing purchase. No. It's for everything. They have said the supplier gives a 5% discount on all purchases. So everything you will get. Earlier it was below 1 million, so you don't get any discount. Now it's more than 1 million, so you're getting a discount on everything. Full you get a discount. They all purchases. It's on everything, Abdullah. Did you get it, Abdullah? They've clearly said it's on all purchases. Abdullah, can you see that? Very clearly they have said it's on all purchases. Abdullah. That may be a different way in this. Maybe that's the thing. No, now that is that those questions are, I told you, right? Those questions, the costing can't come in section C, one thing. It's not going to come in section C. And maybe there was something mistake in that. Maybe students found it so difficult. Some students did it this way, the right way. Some students did it the wrong way. So here that's they have very clearly said it's for all purchases. We do it this way, right? There are section C we should practice in Kaplan. Please don't do section C Kaplan question, costing questions. You do section C Kaplan questions, but don't do the costing questions there because it's not going to come in section C. But if you want for practice purpose, do it just to calculate throughput and things like that. But better to do costing in section A and B mostly. Try to do the questions on the study hub because they are updated questions. Right. If you do section C questions on study hub, if you get doubts, message me. Section C, everything will come, but section B questions won't come. That's it. All the other sections will come, except for B. What will be the annual relevant cost of the manager for Sunday trading? Now, manager, just because he's coming on Sunday, we are not going to pay him anything, right? Anything extra is not going to be. He will also be paid a bonus of 1% of extra sales generated by Sunday trading. He's only going to get a bonus of 1%. Maybe that 1% bonus is only his relevant cost. Annual relevant cost of the manager for Sunday. He is going to be paid 1% bonus. What is the extra sales generated on Sunday? Manager will get a 1% bonus. 800,000, he will get a 1% bonus. That's the only thing. Yeah, it's coming on a decision making. Here they're asking, what is the annual relevant cost of the manager? Relevant cost of the manager for Sunday trading. The salary is not relevant because it's anyways paid. No, salary is fixed. Therefore, not relevant to Sunday. But they have told him he will get a 5% bonus of the, what is that? Sorry, manager will be paid a bonus of 1% of the extra sale generated by Sunday trading. So he will get a bonus. That is relevant because only if Sunday trading happens, he will get the bonus. No, 1% of the extra sales. Extra sales is 800,000, meaning he will get 8,000. So B. Yeah, he will only get that 8,000, which is right. What is the relevant cost of heating and lighting the store for Sunday trading? Now, first see how many hours this is open. The store has previously only opened 6 hours per day, 6 days per week. Normally, they are open for 6 hours a day. Normally, this store is open, normal working hours. Normal working hours is 6 hours for a day. 6 hours for a day. Per day. For 6 days a week. For the 50 working weeks. That's a normal. Now, heating and lighting, what have they told? The store will have to be lit at a cost of 30 per hour and heated at a cost of 45. The heating will come on 2 hours before the store opens. So, heating will only happen for 25 winter weeks. Only during winter, you're putting the heater on. Okay. For that 25 winter weeks, per day, you're going to have the heater open on for 8 hours. By 2 hours before itself, you're on 8 hours per day. 2 hours before the store open. 8 hours per day. Okay. For 7 days now, you're going to open now. And they're only asking for Sunday. So 8 hours on Sunday. They're only asking on Sunday, no? They're asking annual relevant cost of heating and lighting the store on Sunday. They're asking heating and lighting and heating the store on Sundays. Only for Sunday they're asking. So 8 hours on Sunday. For how many Sundays? Per year. One Sunday has 8 hours. There'll be 50, sorry, not 50, 25 Sundays. Only it will be on. Why? Because Other weeks, the heater is not on. Meaning 200 hours, there will be heating for that 200 hours. Okay, 200 hours of heating. So what is the heating cost? Heating cost that 45 per hour. So 45 into 200 is your heating. For Sunday heating. Then lighting 30 per hour. Lighting will happen throughout the lighting. They will only on the lights. Just because the heater is on, lighting doesn't have to be on. No. 6 hours normally they're opening, but here they have said the heating will come on 2 hours before the store opens. So heating you have to on 2 hours before itself. Normally 6 hours per day they are opening the shop. But the heating has to be done 2 hours before itself. That means you will start heating at what time? You will start heating 2 hours before. That means altogether 8 hours the heater is on. Normally 6 hours we are open, but we are running it 2 hours before itself. Meaning 8 hours for a day it has to be on. Lighting of course will be on 6 hours a day. 6 hours for a day. For that is for one Sunday. There will be 50 Sundays, no? In the year at 30 per hour. So is it 17,000? Let's just confirm this. I feel like I've missed something, but I think it's incorrect. 18,000. I've missed something. Is it my addition? 8,000 plus 8,000 is. What have I missed? Oh, 6 hours, 30 days. 8 hours, correct? No, 8 hours, 40, 25 days. What did I go wrong? 6 hours, 30, 50 days. I have done it right. What is wrong? Heating is 8 hours into 45 into 25 days. Where did I go? 8 into 25, am I wrong? Right. 8 into 45. Ah, okay, my addition. My multiplication has gone wrong. Sorry, guys. It is 18,000. It's just my multiplication that wrong. Yeah, I'm so sorry. My multiplication. Yeah. Sorry. I have typed it 45 instead. It's correct, right? So I hope you all understood that. Annual rent of the store is 450,000. The annual relevant cost of rent for Sunday trading is 0. Why is the relevant cost of rent 0? Because it is a uncontrollable. It is not opportunity. It is not an incremental cost. See, it's not incremental. It's going to be the same thing, right? So it's not incremental. Therefore, it is not relevant. What is the annual relevant cost of labor for Sunday trading? Okay, labor. We are taking without the manager. The store employs 4 employees in addition to the manager. They each work 5 days a week and are paid 200 per week. They are all currently working on Sunday and take a day off. If Sunday trading is introduced, 2 of the existing staff will work on Sunday instead of Saturday and be paid a premium of 30 each. So you have to take the premium 30 each, meaning 30 into 2. 2 of them will be paid at the premium. So 30 into 2. 2 part-time employees will be hired for 20 per week. 30 each is a fixed cost. No, 2 part-time employees will be hired for 20 each per Saturday. 20 each. Are we paying 20 hour? No, 20 each. Okay, so 2 part-time employees. 2 part-time employees. They will be paid. For Saturday, they will be paid 20 each. So there will be 50 Saturdays. No, 20 into 2 into 50 Saturdays. And Sunday, they will be paid 30 each. So 20 into 2 into 30. Sorry, why am I taking 20 into 2? Sorry. 30 into 2 into 50. Sorry. 30 into 2 into 50. 30 per hour. 30 per worker 30 per worker into 2 workers into 50 Saturdays. Because for 1 Saturday, they are paid 13. So here 20 per worker. 20 per worker into 2 workers into 50 Saturdays. Sorry, here Saturdays, they are Sundays. I have to change that one. Here Sundays. Right. So this will be 30 into 2 into 50. So 5,060. Where have I gone wrong? Sunday trading. 70 on Sunday. Saturday. 30 each. So for a Sunday, they'll be paid 30 each. No? Then we have to take 16 to 50 Sundays. So it's 8,000. Yeah, my heating and lighting. Yeah, correct. So this is 30 each for 1 Saturday, Sunday. So we have to take for 50 Sundays. 30 each for 2 employees. This is 1 Sunday, no, so we have to take 50 Sundays. Then it comes. So totally 8,000. That is the relevant cost of leave. Right, guys. So premium paid to the existing staff, replacement staff on Saturday, temporary staff on Sunday. So 8,000 there. Guys, is it all clear to you all this question? Is everything clear? Is everything clear? Any doubt with regard to that question? Any doubt with regard to that question? Guys, I want to give the break now because I have to pray. So 7:20, 7:40, 45. Right. You all didn't have any doubts after the break? Ma'am, Saturday and Sunday cost will be not for 1 staff, for 2 staff. They have told me there are 2 staff. 2 staff, no? They're taking 2 extra staff, right? They have said if Sunday is introduced, 2 of the existing staff will work on Sunday instead of Saturday. And both of them will be paid a premium of 30. So 30 will be paid for 2 employees for 1 Sunday. But we are going to have 50 Sundays, no? So we multiply by 50. So this is the premium for those 2 guys for the entire year. Then after that, 2 part-time employees will be hired for 20 each. So 2 part-time, 20 each into 2 workers into 50 Saturdays. Sunday, 30 each you will pay for the 2 workers for 50 Sundays. Is that clear now? Is that clear now? Siraj said it out. It's not 1, it's 2 of the existing staff will be paid a premium. Is that clear, Siraj? Siraj, is that clear? Ram, is that clear for you also? Ram, is that clear for you also? So we'll meet after the break. I'll go down. Guys, I hope the previous doubts you all have cleared everything. And now we are starting off with cost volume profit analysis. So here there are simple ratios that you need to remember. This is basically you're going to see at different volumes how your profit is going to be and what level your profit is going to be. In general, we calculate break-even point. This is a point where no profit, no loss is made. So these are the formulas for break-even, where it's generally sales minus all variable costs. And contribution. No, wait. Okay, to find break-even point, we first need to find the contribution, which is sales minus all variable costs. Contribution per unit will be selling price per unit into minus variable cost per unit. Break-even formula is fixed cost divided by contribution per unit. Break-even revenue is equal to break-even volume. That means the number of units you sell at break-even multiplied by selling price per unit. Or you can also calculate break-even revenue by taking your fixed cost and dividing it by CS ratio. For multi-product, that means if you're selling more than one product, you take the fixed cost, divide by weighted average CS ratio. How do you calculate the weighted average CS ratio? Total contribution divided by total revenue. So you take the contribution from all the products and divide by total revenue of all the product. Okay, observe. I did not see it. I'm so sorry. I did not check. Out. So this is also market size, that one. Miss, in market size variance, if budgeted sales is less than revised sales, it's adverse or favorable. Market size variance, if the budgeted is less than revised. Budgeted is less than revised, meaning what? It's sales, right? Oh, budgeted sales is less, meaning your revised sales is greater. It's favorable. That means the market has been favorable. That's why the revised sales is greater. Yeah. If the revised sales is greater, it means the market is favorable to you. So it's favorable. Current market is favorable. That's why the current sales are greater. Okay, so weighted average CS ratio is how this is how you calculate it. Normally, contribution to sales ratio of one product, you take contribution per unit divide by selling price. For material, it's cost, right? So if cost is higher, it's unfavorable. If revised cost is higher, the market is more pricey. So it's unfavorable. Material is a cost. Sales is a revenue. So it depends on what it is. Is it a cost or a revenue? So sales to contribution ratio is contribution divided by selling price. Weighted average CS ratio is total contribution divided by total revenue. Right? It's a different doubt, by the way. So margin of safety is how many units you're kind of safe by. To get the margin of safety in volume, you take the current sales and minus the break-even sales. So if break-even sales is 9,000 units and you're currently selling 10,000 units, that means you're selling 1,000 more than break-even. That 1,000 more is your margin of safety. That is your safety volume, the amount you're selling more. Margin of safety as a percentage, you have to take the margin of safety volume divided by budgeted sales volume into 100% to see how many percent you're safe by. These are different ways you can calculate this weighted average CS ratio depending on how the question is given to you. Right now, if for example, they are telling you A and B sold in the mix 1:3, A has a CS ratio of 40%, B has a CS ratio of 50%. How do you calculate the weighted average CS ratio? Then what we do is we take 1 into 40%. That means 1, the ratio of A into 40%, the CS ratio of A, plus 3 into 50%, divide by 4. So that is a weighted average CS ratio. In situations like this, I've given you how you have to get it because it can come in this way. And then you get confused because generally weighted average CS ratio, the formula is this. But if they don't give you total contribution and total revenue, then how do you find it? Then you can simply take it like this if you know the weighted average CS, if you know the product by product CS ratio and their weights. 1 into 40, the weight of 1 into the CS ratio of 1 or A plus the weight of B into the CS ratio of B divided by the total weight. That will also give you weighted average CS ratio. So then target profit, how to calculate the number of units to sell to achieve this target profit. You take the fixed cost plus the target profit divided by contribution per unit. How do you get target revenue? the volume into the selling price per unit. Fixed cost plus the target profit divide by contribution to sales ratio. To get the revenue, we divide by the CES ratio. To get the profit, we divide by the contribution per unit. This is the profit volume, sorry. To get the volume, we divide this by the contribution per unit. But to get the revenue, we divide it by the CES ratio. Target revenue for multi-product, fixed cost plus the target profit, divide by weighted average CS ratio. This is the break-even chart. At this point, you break even, meaning you make no profit, no loss. If you sell more than this, you will make profit. If you sell less than this, you will make losses. This is the profit volume chart. See, at this volume, you are making zero profit, meaning that is the break-even. If you sell more than that, you are making profit. If you sell less than that, you are making losses. Where it cuts the y-axis is your fixed cost, because even if nothing is sold, that is your cost. For multi-product situations, you have to do a ranking based on your contribution, which product has the highest contribution, you make a ranking. Then you see, okay, if you're only selling that product, what is your revenue? What is your profit? Then if you're selling A and B, what is your total revenue from A and B both? And what is your total profit from both? If you're selling all three, what is your total revenue from all three? And what is your total profit from all three? And then you plot that graph. That graph plotting will not be given to you, but however, you will need to know how that graph is plotted. Like you will need to know, for example, that this, you will need to know, for example, that this first line here, you will need to know, for example, that this first line here is the most profitable product. That's why you make it first. The second one is first profitable and second profitable product. Third one is all the products together. So ranking 1 was for this. This is ranking 2, beta. Ranking 3 was gamma. So you need to know, if you sell only alpha, this is your revenue and this is your profit. If you sell alpha and beta both, this is your revenue and this is your profit. If you sell all 3 products, this is your revenue, this is your profit. This is based on the ranking. Alpha has a ranking number 1, beta has a ranking number 2, and gamma has ranking number 3. You need to know that, right? Let's go to some questions on CVP analysis. I think I already did. Maybe I didn't do it right. I did not do it. Minimum revenue. Where is minimum revenue? Where is cumulative revenue? That's all the revenues together. Revenue from A plus revenue from B plus revenue from all 3. Cumulative. What's minimum revenue? What's minimum revenue, Tisha? Cumulative revenue, you mean? Minimum revenue? From where did you get minimum revenue? I'm not aware of it. Can you tell me from where it is? Maybe you're talking about cumulative revenue, the total revenue. This is the revenue from selling all of A. Cumulative meaning total revenue. This is from A. This is from selling A and B. And this cumulative revenue meaning total revenue. So first, if you sell only A, this much. If you sell A and B, this is your revenue. If you sell all 3, this is your revenue. So as you sell more, your revenue increase. Cumulative revenue is all the revenue together. What I said, it's minimum revenue. Minimum revenue is the lowest revenue. That is the break-even revenue. Minimum revenue meaning the break-even revenue. Revenue at break-even point. Minimum revenue is break-even revenue. Yeah. Okay, they have termed it as minimum revenue. What they mean, there is a break-even. And this is how you find. Okay. It's okay. It's a good doubt that you asked. It's a good doubt. So minimum revenue meaning they mean the break-even revenue. Okay, let's do Nabil. Neville makes and sells a range of 3 gardening products. Budgeted data for the next year is as follows. Product E, product F, product G, they plan to sell. Selling price is given, variable cost, contribution, fixed cost, profit, budgeted sales, maximum demand, machine hours per unit. Budgeted fixed overheads are also given. The following multi-product break-even chart has been drawn based on the assumption that Neville is able to sell the product in order of contribution to sales ratio. So how have they ordered the products? Based on the product that has the highest CS ratio is made first. The product that has the next highest CS ratio is made second. So you're ranking the products based on the CS ratio, right? Up to the point of maximum demand for each product, starting with the highest ranking product. How do you calculate the highest ranking product? Based on CS ratio. The point marked 1 it shows revenue and profit at the point where only the product with the highest CS ratio is being sold and sales value is the maximum demand for that product. They're taking based on the budgeted sales mix. What is the break-even revenue? First, they're asking the break-even revenue. How do you calculate break-even revenue? Break-even revenue, this is multi-product situation. This is a multi-product situation. They want the break-even revenue. This is a multi-product situation. There is more than one product. So how do you calculate break-even revenue for a multi-product situation? Oh, I think I closed it. How do you calculate break-even revenue for multi-product situation? What's the formula? Cost divided by what is your fixed cost? Cost. Yeah, they gave no budgeted fixed overheads 1,518,000 divided by weighted average CS ratio. How do you calculate weighted average CS ratio? Total contribution divided by total revenue. Right. Total contribution, how do you find contribution per unit into the maximum demand, no? What have they told you? Based on the budgeted sales mix. They want for the budgeted sales mix. So we have to calculate the total contribution for the budgeted sales mix. So total contribution from all products, how do you find? 120 into 20,000 units because they're asking to find it based on the budgeted sales mix. Plus 165 into 17,000 units. Plus 60 into 160,000. Sorry, 60 into 16,000 units. We have to take the budgeted sales, not the maximum demand, because they very clearly told you based on the budgeted sales mix. They asked you to do the calculation based on the budgeted sales mix. So total contribution divided by total revenue. Total revenue also we calculate for the budgeted sales. So what is the weighted average CS ratio then? Total contribution divided by total sales. So this we take it as 0.48. So what is our break even for multi-products then? Total fixed cost divided by weighted average sales ratio. 3,100 and why am the houses open? Oh, I think I have to take this exact value, then only it will come. So what I'm going to do is 151,800 divided by this exact thing. Then I hope the answer comes. Divided by the exact 156,000. Yeah. If you take the exact one, only the answer is coming there. Next one. What is the profit at the point marked product 1? We have to find the profit if only product 1 is made. Now we need to find which is product 1, right? How do you find that? Question 2. We need to find what is product 1. How do we find what is product 1? Because that ranking is done based on the based on the CS ratio. So CS ratios. For E, F, G. What is the CS ratio for E? Contribution per unit divided by selling price per unit. CS ratio here 165 divided by 300. CS ratio here 60 divided by 170. What is the ranking then? So based on this ranking this is rank number 1, rank number 2, rank number 3. Meaning rank number 1 is product F. So if only product F is made, what is your total profit? So total profit if only product F is made. So total contribution will be, if you make only product F, your total contribution will be based on what demand? They have told this chart is drawn based on maximum demand. So you take the maximum demand now because the chart is drawn taking maximum demand. So total contribution from F will be 165 into maximum demand 19,000. Then minus the total fixed overhead. So if you are, even if you are making only product F, the total fixed overheads you have to pay, right? Minus the total fixed overheads. Then what's the profit? Because fixed overheads still have to be paid. Now that fixed overhead is paid only by one product. So 1,670,000. That is a profit if only product F is made. But the question is such that they have not told us what product it is. So we have to find the CS ratio and then rank and find the product first. Assuming product F has the highest CS ratio, any doubts? How did I get the total contribution? I don't have to take selling price and fix variable cost now. I can simply take 165 into the maximum demand. Why did I tell maximum? Why did I take maximum demand? Because they told here up to the point of maximum demand of each product. That means they have drawn this based on the maximum demands. So how did I get the contribution? Contribution per unit into the maximum demand. No, any other doubts with regard to that question, guys? Is that answer clear? You all have anything to clear? All okay. Okay, guys. Assuming product F has the highest CS ratio, we actually confirmed it. What amount of revenue corresponds to the point of break-even revenue on the chart? No, they are asking you what's the revenue here. That means if only product 1 is sold, what is the break-even revenue? Because this is only when product 1 is sold, right? So if only product 1 is sold, what is your break-even revenue? How do you calculate break-even revenue? But only one product is sold. It's not multi-product there because we are only assuming product F is sold. Break-even revenue we are taking for single product. They are asking break-even revenue if only product F is sold. That means it is what break-even revenue for single product. So break-even revenue will be fixed cost divided by contribution sales ratio. So the fixed cost is, it's pretty easy. Fixed cost is 151,518,000. CS ratio for F was 0.5. So what is the break-even revenue? 2,076,000. Machine hours are limited for the year. In order of priority, should the 3 products be made to maximize profit? Now they're asking you if machine hours are limited, okay, what should the ranking be? So we have to find contribution per machine hour. So first we have to take the contributions of the products. For each product, E, F, G. Now we have to find contribution per unit. 120, 165, 60. Now machine hours per unit. We are divided by machine hours per unit. For 1 unit, machine hour 1.5. So in 1 hour, what is the contribution per machine hour? Per machine hour. For every single machine hour, what is the contribution? Now here, they made 120 in 1.5 hours. That means in 1 hour, they made 80. Here 165 was made in 2 hours. Here, how much is that? 60 was made in 0.5 hours. So here 165 in 2 hours, meaning in 1 hour you made 82. 16, 0.5, meaning in 1 hour you make 120. So what is your ranking based on contribution per machine hour? Based on machine hour, G should be made first, F should be made second, and E should be made third. So G, F, and then E. Is that clear, guys? Any doubts with regard to that? Which of the following statements regarding cost volume profit analysis are correct? It assumes that selling price remain constant. Yes, we do that assumption. It ignores non-production cost. If we ignore it, because we take it as fixed cost, right? So let's keep that up. It ignores economies of scale that affect the cost per unit. Yes, we do not take economies of scale into consideration. It assumes that fixed costs remain fixed throughout the range of sales volume being considered in the analysis. Yeah, we also assume, now here if you can see the limitations are the assumptions. I think I did not go through that. Here the limitations, we assume that fixed costs are constant at all output volumes and there are no stepped fixed costs. This method assumes that variable cost and selling price do not change. We assume that efficiency and productivity are constant. We assume that whatever we produce, we sell. There's an assumption that fixed and variable cost can be split and there is no semi-variable cost. So it's 1, 3, and 4. Non-production cost, it is not ignoring. We are taking it as fixed cost, right? So it's 1, 3, and 4. Right? Right. Yeah, so we have done a question on limiting factor. Sorry, cost volume profit analysis. Then we move on to the next area. Limiting factor and linear programming. So limiting factor, you all already know, we have done things like throughput. We have done those areas where you have some resource in limitation, right? So when there is a limiting factor, and especially if we are going to decide with the limiting factors, what is the optimum production that we can do, right? There are 3 steps. We have to find out what is the bottleneck. We have to rank it based on contribution earned per scarce resource. We just did that, like for machine hour. We have to rank it based on, like the previous example, contribution per machine hour. Then based on that, we rank. And based on that contribution earned per machine hour, we rank and we make the products in that order. So we can get the optimum of that limiting factor. So we make certain assumptions, however, when we are doing the limiting factor analysis. Linear programming is used when we have more than one limiting factor in question, right? So when we have more than one limiting factor, we have to do this through a chart. So we draw the linear programming chart, but we are not, you guys, you will not be asked to draw the graph. The graph will be drawn for you, but using that graph, you have to identify the feasible region. You have to identify the different lines that surround it, the different constraints, the limitations, and then you have to find the feasible region. In the feasible region, you have to find the optimum point. The optimum point is the point at which, or the coordinates at which the contribution is maximized, right? Then guys, what is a shadow price? A shadow price is especially when resources are limited. Resources are limited, and in order to buy more of that resource, in a situation where it's so scarce, you can't find it anywhere, resources so difficult to find, in a situation like that, how much extra or what is the premium, the extra amount that you are willing to pay to buy that resource. Now, for example, we in a situation where we are running short of milk powder, right? But you really need the milk powder. So let's say normally the milk powder is like 200, let's say for example. But during a shortage, we are even willing to pay 300 to buy it. We are willing to pay 100 more to buy it. That 100 more we are willing to pay is a shadow price. So shadow price is how much extra are we willing to pay to buy this raw material. Generally, the shadow price will be equal to the extra contribution. That means by getting this one more resource, what is the contribution? Extra contribution I'm getting. By getting 1 more kilo of material, I can make a contribution of 10. So that means I'm willing to pay anything lesser than 10, extra 10 to buy that kilo. So you will generally see the shadow price is the extra contribution you'll pay up to. You pay a premium up to the extra contribution you get by that 1 kilo of material. Right? So this is the additional contribution. It's generally the additional contribution that is generated from one additional limiting factor. So up to that amount, we are willing to pay more, but not more than that, because then our cost is greater than our benefit. Right? The opportunity cost of not having the resource. So if I don't have this resource, what am I going to lose? Right? So I'm willing to pay something lesser than that loss to buy this, because then I can at least get that, right? The maximum extra amount that should be paid for one additional unit. How much extra am I willing to pay to get that one unit? Generally, it is, I will calculate my extra contribution and I'll be willing to pay something up to that, not more than that. Shadow price is not the maximum price, it's the extra amount. How much extra am I willing to pay? Currently, I'm buying at 4. Let's say currently I'm buying some raw material. Currently, I'm purchasing a raw material at $4. Okay. If I have 1 more unit of this raw material, I can get an extra contribution of $2. That means I am willing to pay for 1 extra kilo. I will make a contribution of normal 4. But if I get this, I can make a contribution of, wait. So currently I'm paying $4. So I am willing to pay, currently I'm paying 4, but when I pay 4, I'm getting a contribution of some amount. But now when I am buying 1 extra unit, I'm getting another contribution of 2. So I'm willing to pay up to 6. Why? Because I will get a extra benefit of 2, right? So I'm willing to pay, I'll pay that 2 to get this 2. Basically, you're not making anything here. You're not making anything here, but you're willing to pay up to that because at least your customer is not dissatisfied. But anything below 6 will be good. Example, if it's $5, I should buy it. Normally, I'm buying at 4, but if it's $5, I should buy it because I will make $1 extra. Right? So this is the extra amount that I'm willing to pay to buy 1 more unit. So shadow price, how do you calculate? You basically take that formulas and you add 1 more to the constraint concerned. For example, this is your formula. This is the cutting hours. This is the assembly hours. To calculate the shadow price, they're asking you to calculate the shadow price for cutting process. They're asking you to calculate the shadow price for the cutting process. So what do? You first solve this and you find the X and Y and you find the contribution at that point. This is the normal coordinates. So you first solve this and you find step number 1. You will solve the current situation and you will find the coordinates. That's the X and Y. And along with that, you will find the step number 2, you will find the related contribution. That means currently, but you'll find the current contribution. Then what you do is, to find the shadow price, what you do is, in step number 2, in step number 3, you add 1 to this. Now, they're asking for cutting process. Then you will add 1 to this. So, this 37, 6 will become 37. That means if 1 more unit of that resource is available, it will become 37. So when that is the situation, When that is the situation, so in the new equations, now there's a new equation set, right? Because this is 37. This doesn't change, this becomes 37. You solve the new equations and find the new coordinates. Then what you do in step number 3, you find the contribution at that point. Step 4, find the new contribution. Then after that, you see now when we have this one more unit of cutting time, how much did your contribution increase by? So in step 4, you compare the two contributions. Step 5, new contribution minus old contribution. You do that. Then you will see, okay, if one more unit of cutting hour is available, what is the increase in contribution? Up to that, you will be willing to pay. So that's how you calculate shadow price. Then slack is when you have more of that resource. You have more than what you need, right? So those are the terms that you need to know for this. Yamco, I think already I have done, right? Cut and stitch done, Karaco done, home electrics. I think I have not done this. It's a very good question also. Let's do this. Okay, Home Electrics Co. manufactures electrical appliances for domestic use. It makes up to 2 divisions. Small Appliances Division, 2 of the products manufactured by Small Appliances Division are the blender and the toaster. The standard cost card per unit for each of the products are as follows. Selling price given, direct material, direct labor, variable overhead, fixed overhead, profit. In the first quarter of the year, the supply of material was restricted to 2,000 kilos per month. This was due to a global shortage. So material is restricted to 2,000 kilos. It is now April and it has been identified that material will come to be limited to 2,000 per month. But also labor, not only material, even labor will be restricted to 3,200 hours per month. The management accountant has supplied formulas for production constraints as follows. So material is limited to, we need basically 2 kilos of material for B. So 2B plus 3 kilos of material for T. So in 2B plus 3T should be lesser than 2,000. Labor 3 hours for B plus 5 hours for T. Whatever we use should be lesser than 3,200. So those are the two constraints. The Large Appliances Division, this division also manufactures 2 products, a freezer which earns a contribution of 150 and a dishwasher which earns a contribution of 200. Give me a minute, please. The division also manufactures 2 products, a freezer which earns a contribution of 150 and a dishwasher which earns a contribution of 200. Both products use the same resources, several of which are in short supply. In April, only 4,000 labor hours, 2,500 material and 3,200 machine hours will be available. The management accountant has applied linear programming and defined the following constraints. Material is limited to 2,500, labor 4,000, machine time 3,200. Demand is also limited to 250. Labor and machine time have been identified as binding constraints and an optimum plan of 240 of F and 200 of D have been calculated. They have already calculated the optimum point for large division. For the large division, they've also already found the optimum point 240 of F and 200 for D. They have already found the optimum point. What is the contribution per unit of limiting factor for T in the first quarter of the year? Contribution per unit of limiting factor for T. What is the limiting factor here? For T. But we have to find what is the limiting factor. In the first quarter of the year, the supply of material was limited. In April, no, both are limited. In the first quarter, they are asking here, what is the contribution per unit of limiting factor for product in the first quarter? In the first quarter, you can see in the first quarter of the year, the supply of material only was limited. So they are asking the contribution per unit home appliances. They are asking the contribution per unit per material. Per material kilo, right? That's what they ask. They're asking that. For tea, they're asking contribution per material kilo of tea. For the product tea, yes. So for product tea, what is the contribution per unit of tea? Contribution per unit of tea is 150 minus 15 minus 35 minus 80. Okay, one unit of tea needs how many kilos of material? We can find from here. 1 unit of tea needs 3 kilos of material. 1 unit needs 3 kg. That means 3 kg. So what is the contribution per kilo? Using 3 kilos, we made a contribution of 52. So using 1 kilo, we have made a contribution of 17.33. Oh, sorry. Have they said nearest whole number? Oh, sorry. They said nearest whole number. So you have to be very careful, guys. If I could not see this, you also would not see this. And you would get it wrong, actually. They're asking to the nearest whole number, so we should write 17. So sorry. I also missed it, so meaning you also could miss it, right? So be very, very careful. Small error. Be very careful before you enter. Make sure you say, I just very quickly did it and I went wrong. So you don't do that mistake. Using the simultaneous equation, what is the total contribution to be earned from B and T in April? So in April now, the optimum point is the point where these two lines are meeting. So now can someone please use your calculator? They're asking using question 2. Using simultaneous equation, what's the optimum point in April? So you have to solve this. Can someone please do it? I don't have the calculator with me, guys. Can someone quickly solve this and tell me what is B and what is T? Use the simultaneous equation, solve it using the calculator. Already we have learned that. Tell me what is B and T? Using the calculator, solve it. You can solve it faster. If you do not know how to solve it, please type your calculator model on YouTube. You have plenty of videos which will teach you how to use the calculator to solve simultaneous equation. So at this point, I'm going with the answer 400B and 400. Everyone is saying that, so I'm going with that. So at that point, using the simultaneous, what is the total contribution to be earned from B and T? Oh, they ask you the total contribution. So okay, at this point, these are the quantities. Total contribution will be contribution from T is 52. What is the contribution from B? Product B contribution is how much? 80 minus 10 minus 20 minus 37. So contribution formula we can take as 37 into B plus 52 into T. So 37 from 1 unit of B. So total contribution will be 37 from 1 unit of B plus 52 from 1 unit of 32 from 1 unit, 37 from 1 unit of B. So we are making 400 units of B plus 52 from 1 unit of T, and we are making 400 units of T. So at this point, the total contribution will be 35,600. Did all of you get that? Very good. What's the option? Please be very careful when putting these answers. Small things can do. Which of the following statements about the use of linear programming to resolve limiting factor problems are true? The linear programming method helps to identify the optimum selling price. No, it's not about selling price. It's about optimum quantities to be making. It's like the plan. Now, see, when we solve this simultaneous equation, we get the optimum combinations. Number of units. How many units of B? How many units of D? It's not the selling price. Slack occurs when more than the maximum available of the limited resource is required. Slack is when you have extra resources. Slack occurs when more than the maximum available. No. Limiting factor occurs when you need more than the maximum. Slack occurs when more than the maximum available of the limiting factor is required. No. When there's slack, you have more. You need less resources than what is there. Slack meaning we need less than what is there. That is why there is a slack, right? So neither, both are. In this case, both are. What would be the shadow price of material in the large appliances division? So they have told now, guys, they're asking to calculate the shadow price. That's why I told it's a good question. In the large appliance division, they have told labor and machine time have been identified as the binding constraint. So in the large appliance division, the main problem is what? Labor and machine time. These two. These two are the main equations we go by. So using that equations, that means using the current situation, they have solved these two. They have solved these two labor. They have taken labor 10F plus 8D. You want, you can do a trial and see. They have taken this line and they have taken the machine line 5F plus 10D equals 3200. They have solved this simultaneously and they have given the answer also. The optimum current plan is what? The current using this. They have solved it and they have got F equals 240 units. And they have got D equals 200 units. This is what they have got. They have got the optimum plan as well. So now our first step is, at this optimum plan, what is the contribution we have to find? So we need the contributions. Have they given? Here they have given. No? The contribution from 1 unit of, they have already given. Contribution from 1 unit. The contribution or manufactures 2 products, freezer earns contribution of 150 and dishwasher earns contribution of 200. What is the contribution formula then? Contribution formula is 150F plus 200D. So what is their current contribution? So we have to find their current contribution. 150 into 240 plus 200 into 200. What is their current contribution? Because shadow price is the extra contribution we get when 1 more unit is available. This is our current contribution. Now they are asking you, what is the shadow price of material? In the large appliances division. For material, will there be a shadow price? Labor and machine time is only a problem, no? So labor and machine time only, there is a problem. Material, that means we have more than what we need. So shadow price is 0, right? Material doesn't have a shadow price. Yeah, we are right. It doesn't have a shadow price. When I did all this work. Okay, sorry. Material is not in short supply. Is not in short supply. And when I did all this, I did not figure it. Is not in short supply. Therefore, there is no shadow price. You don't need to do all these workings also. Okay. They are asking which of the following statements about linear programming method in the large appliances division are true. Product D has a slack value. Product D has a slack value. Demand from is, yeah, it's slack. It's 240 because that is not a binding constraint. They have not told only these two are binding, meaning D is slack. Otherwise, they would have told no, D is also problematic. D is slack. Contribution of 76,000 will be earned from the optimum plan. Okay, good that we calculated it. Here from the optimum plan, we have a contribution of 76,000. That is also true. Labor and machine time intersect at the optimum point if shown on a graph. Yeah, labor and machine time will intersect at the optimum point. All three are correct. Okay, guys. So we have even done that. But if they are told to find the shadow price for labor, I'm just doing this, okay? Just in case they asked you to, just in case, if they asked you to calculate shadow price for labor, then how do you do it? Then what you do is you take these two equations. For labor, you add 1. That means labor, it will be 4,001. Okay. And machine will be same thing. You don't change it. Okay. Now calculate the new simultaneous equation using the calculator. You all are very good at doing it. Solve the new simultaneous equation using the calculator. Why is this not moving down? Calculate the simultaneous equation. Calculate the new optimum plan using simultaneous equation. Tell me what is F, what is D. This is just in case, right? I'm just telling you just in case. Can you tell me the Can you guys quickly solve it simultaneously and tell me? Because if they're asking shadow price for labor, you have to add 1 for labor. Guys, I don't have a calculator with me. Can someone quickly tell me the value? If they're asking shadow price for labor, you have to add 1 for labor. So the new optimum plan is 240.176 and D equals 1999 plus 91. Then you have to calculate the new contribution. And you have to see how much the contribution is increasing by. So 115 to 240. So what is the new contribution? That means when 1 more unit of labor is available, contribution is going to what is your increase in contribution? Increase in contribution is the contribution is increasing by 8. So shadow price is 8. That means you're willing to pay 8 more than what you're paying now. Let's say you're paying 2 now, you're willing to pay 8 more, meaning you're willing to pay up to 10. How much more? Okay. This is your shadow price. That is just in case, guys. So you don't have to do it like that, but that's just in case. Okay, students, actually today I'll be ending there. There is half an hour less, but I'll be catching up that half an hour next week. So next week we'll be having a little longer class, right? Or in the next 2 classes, we can have 15 minutes. But today I will have to stop early. So we'll stop there. And I will meet you again next Friday. Please collect your doubts. Have you all sent any doubts that you all want to clear? Any doubts that you all want to clear? Yeah, tomorrow you have exam. Tomorrow, Jan batch guys have mock exam. I'll be coming there and doing the exam. Please be prepared for the exam. We are going to have it tomorrow. I'll be coming there. I hope you guys are coming. If I come there, no students, then no point. I'll just put a message on the group just to see how many of you are coming. But please come there. We're doing the mock exam. Please come to the institute, Jan batch guys, for mock exam. Okay. Who is coming? Others are all coming, right? I'm also coming because after I come and if none of you are there, then there's no point. So just tell me how many of you are coming so I can decide whether Ram is coming. Only you're coming. Raju is coming. Yeah, so please come because I don't want to be there alone after that. Or I don't want to get back home again. So, okay. I'll just put a message anyways to double check whether you all are coming. For you all only I'm coming, so because tomorrow there's nothing, just the exam. I'm just coming to sit there and wait. Yes. So see you tomorrow for the Jan batch. TRG, I'll meet next week.